we are distracted. It in the chat box.
So please, I can't hear you.
Can anybody else hear me? Please use the comment section. Use the chat. So you just use the chat box, right? All right. So we would like to proceed from there. So today we are looking at A to Z of token economics, right? Last week we looked at what topic did we look at last week? I think few of us were here last week. So let us have some. Um, if you remember what we did last week, can you remind me what topic did we talk about last week? Okay. Last week we talked about how to spot a great crypto project, right? How to spot a great crypto project, and we looked into 8 steps on how to spot a great crypto. All right, I believe you can. All right, so let me share my screen so we can take it up from there. I believe you guys can see my screen, right? Hello, I believe you guys can see my screen. You can use the comment section. Can anybody actually hear me?
Okay.
It's okay. All right, so today we are. All right. I said you guys should use the comment section and don't unmute yourself. Okay? Just use the comment section so you don't interrupt the audio. We are recording the session. All right, so today we'll look at token economics. We call it tokenomics, right? Tokenomics is the economics of cryptocurrency, right? It's the economics of cryptocurrency, and it is used to describe the fluctuation in demand and supply of different types of cryptocurrency. Okay? So many of us have because us who have bought one cryptocurrency or the other would have experienced the fact that to be able to sell, there will always right. There will always be somebody who is willing to buy. Okay, and it is because there is someone who is willing to buy. That's why you are able to sell. Okay, it is because there is someone who is willing to sell. That's why you are able to buy. Right. So it is because of the number of tokens in circulation that is providing that fluctuation in demand and what and supply. Okay, so tokenomics studies the mechanism by which new market develops and describes the rules that determine the path of development of the tokens of each currencies. Right, tokenomics can be considered as part of economics. Many of us who are economics students will understand that they will tell us that economics is in two. It means two things, right? So tokenomics has two meanings, right? So tokenomics, number one, is the science that studies the laws by which the world of cryptocurrency operates. Okay, it is a science that studies the laws by which the world of cryptocurrencies operates. All right. So because if there are no tokens to actually trade, right, you won't be able to trade. Okay, and then if there are no sufficient tokens, why everybody is buying, right? Everybody is buying. You want to ask yourself that where is this other tokens coming from, right? That's where supply and demand comes from. Tokenomics. Now, tokenomics, on the other hand, is also seen as the process of movement, either growth, scaling, or value of different currencies and the entire set of cryptocurrencies in the world. Now, why is tokenomics important? Why are we considering it? Okay, why is it a point of consideration? We live in an era whereby every day you hear about new projects. Okay, tokens and coins were not so many like they are now 10 years ago, 5 years ago, 7 years ago, 2 years ago, let's say 3 years ago. Okay, but in recent times, we now see that so many projects are coming up. All right, day in, day out, projects are coming up, and then you find it difficult to identify, which project to invest in. Tokenomics is actually a good indicator to look into to be able to determine, to be able to make informed decision when looking at a project to invest in. All right. So now, how do you identify promising projects? How do you know a project is not a scam? All right. So there are large varieties of tokens with various tokenomics, which is token models. All right. As token models, which means the model via which the token is designed to operate. Now, by knowing what to search for, you increase your chances of picking a good project. So let's dig deeper. The question is, what is a token at first? What is a token? Okay, so some of us might have heard of the word token even before we get familiar with the crypto world, right? Someone will say, okay, let me give you a token, right? Oh, manage this is just a token, all right? So token is talking about a small fraction of something. So crypto tokens are units value established by what blockchain based initiative on top of an existing platform or an existing blockchain platform in tokenomics. Okay, now some of us we see money as divisible. All right, money as divisible, the ability that when you are given 500 naira, okay, and you are to give 100 naira change back, Okay, that 100 naira is a token of that 500 naira, which is a whole. Are you getting me now? So that 100 naira is a token from that 500 naira. It's a unit of that 500 naira because 500 naira. Don't get it twisted here now. I'm trying to say that 100 naira in 5 places makes 500 naira, right? So when you take 100 naira, it's a unit of the remaining money, which cumulatively makes 500 naira. I don't know if you get my point now. So tokens, right, are unit value from an already established blockchain-based initiative. Okay, now let's look at the token. We have the fungible token and we have the non-fungible token. Now, when we talk about the fungible token, we're talking about tokens that are, that can be exchanged for an entirely different, token. Okay, which means it can be swapped for the same value of another token. All right, so which means you can use Bitcoin to buy Ethereum. You can use Ethereum to buy Cardano. You can use Cardano to buy Metix. You can use Metix to buy Atom. You can use Atom to buy Juno, right? That is fungible. Okay, it can be exchanged for another asset that is different, but this within the same type. They are also tokens. I don't know if you get my point now. That is why our currency is fungible. I can exchange my naira to dollar. Okay, so if I need $1 now, I would have to give 585 naira, 580 naira, which means though I'm getting a different currency, but they are of the same category, of the same quality, right? What that 580 naira would buy is still what that $1 would buy, right? That's fungible. So I can trade my 580 naira for $1. That's fungible. Now, what is non-fungible tokens? Now, non-fungible tokens are those tokens that they don't have monetary value on their own. They don't have monetary value, right? However, due to the tokenization of goods, including artwork, furniture, real estate, NFTs, which are non-fungible tokens, are basically physical entities preserved digitally. Physical entity preserved digitally. So I can tokenize this my calculator, right? When I tokenize this my calculator, right, I will now design a digital form of my calculator, right? I may now give it a use case that probably this calculator is very special. I may now give it a use case that anybody who has the NFT of this my calculator, right, would have access to. Okay, let me use okay, yeah, would have access to my personal library, right? So if you have an NFT of this my calculator, the digital format, you would have access to my library. So possibly I now made a total supply of 10. I give a total supply of 10, but 100 people needs it, right? So now the 10 persons would have to start, the 100 persons will have to start bidding for the limited supply. Okay, let's say I now say, okay, I'm minting this for a start at $5. So 100 persons needs this, but only 10 people can get it, right? So those 100 people will now start bidding, now start buying. Say, okay, I will pay $10 for this. Another person will say, no, I will pay $20 for it. Another person will say, well, let me buy it for $50, right? Or if at last 10 persons now have now bought it, right, and it still remain 90 persons willing to buy, don't you know that 90 persons will be willing to pay much more higher for this particular digital stuff, right? this digital material cannot be exchanged for another. I don't know if you get what I'm saying. So this digital material is the same here. If you carry it abroad, it's the same over there. All right, it's non-fungible. Do you get? It cannot be exchanged for another one, right? So it has its own unique value. All right. Now, to understand your crypto tokens properly, you have to consider including the creation. You have to consider everything, including the creation, the quality of the token, the distribution of the cryptocurrency, right? So you want to look at it that, okay, what was this token created for, right? What is the quality? What is it meant to serve? All right. Then how is it being distributed? You want to be that should be a big concern. How does token works? Now, you go to the movie, you go to the cinema, you buy a movie ticket. Now, that movie ticket gives you the access to the movie, right? Why? Because that movie ticket shows that you've paid for the movie to watch the movie. You've paid for the access, right? You get to the gym, you pay your subscription for membership, right? That's your membership in that gym indicates that you are subscribed to the gym, right? For the training, for membership. Okay. Now, in terms of token now, in the blockchain space, a token represents a specific stake, value, voting right, or anything. And token economics is the quality of a token that interests the investor. Now, what does this mean? For the fact that if you go to the cinema, you buy a movie ticket, that movie ticket gives you access. All right. You go to the gym, you make subscription. That subscription gets you membership to the gym. All right. You buy a share in a company. You become a part owner of the company. So some of you might have heard the phrase, we are all Satoshi. We are all Satoshi, which means for you, for anyone holding any fraction of Bitcoin, either 1 Bitcoin, 2 Bitcoin, 0.1 Bitcoin, 0.001 Bitcoin, we are all Satoshi. Because you holding Bitcoin, right, the token makes you a stakeholder in the Bitcoin ecosystem. Shows that you are adding value to the Bitcoin ecosystem. If you hold Atom, if you hold Juno, if you hold Luna, you become a stakeholder, which means holding that token indicates that you have a stake in that ecosystem. So if you are holding Cosmos and Atom now, you are a stakeholder in the Cosmos ecosystem. Because 1, you are adding value. 2, you have voting rights. Right? If it is governance, you have governance rights. Right? You have the right to vote, to participate. If you qualify for it within the ecosystem. That is what that token represents. I want to believe I'm making sense. So when you hold a particular token, you become a stakeholder of that ecosystem. And that is why it is important for you to look so deep into the quality of that token. So you will know if you are holding a token that is quality or you are holding soap. All right. Now, what is the quality of a token? All right. Tokenomics is an important factor in crypto fundamental analysis. So when an investor is trying to get into a project or have a stake in a project, either you are buying through a exchange or you are buying on a decentralized exchange, it's important you pay attention to tokenomics, because tokenomics is a fundamental analysis. It tells you how strong that project will be. If that project have excess supply, which might make it like illiquid, all right, or it might slow down the increase in price or in the value of that token, right? Tokenomics will expose that. Now, how to study tokenomics? Number one, you have to understand token allocation. Token allocation. It's not just all about buying Wakanda Inu, Helium Gate, Shiba Baby, Helium Baby, whatsoever neck and the like that. Project that does not even make sense. But then, for the fact that you need to understand token allocations, right? How are tokens allocated? How should token be allocated? Every project must have a specific token allocation chart, right? Now, you have to check out whether the team, which is the team working on the project, hold some of the tokens or not. But also keep in mind that a project that the team is holding an allocation of 60% is a red flag. That's a perfect rug pulling, right? If the team is holding 40%, it's a red flag. Okay? If the team is holding 50%, 51%, it's a red flag. Right? Now, you want to look at it. How is this token being allocated? Be aware of a team that holds the most of the token. It's a red flag. Also ensure that the public investors have access to most of the tokens, because a huge percentage of the token ownership must be to the public. That in that way, it's more decentralized, right? So a large portion of the token must be held by the public, so that the public have more power than even the owners of the project. Okay? So let's take this Juno, for instance, right? This is their token breakdown, okay? 2%, 2.74% goes to the core team, which will be held for 12 years, vested, which means without withdrawal, right? Now, 3.66% to Juno Acts, all right? 15.54% to core development of the project. Core development in terms of marketing, in terms of, onboarding more developers who add value to the ecosystem. 30.82% goes to the community pool, right? Then 47.24% go to stake drops. It's like come in form of airdrops and some other, stuff that might be, liquidity provision and the likes. All right. So you want to look at it, how the token is being allocated. If a project that you don't see how the token is being allocated, it is not shown to you, don't buy it. Don't buy it. Right? You want to look at how the token is being allocated, how much is going to the team. Okay? Now, the second one is evaluate the purpose of the token. Token should have what they are used for. Right? What is it used for? You want to ask yourself, you don't want to be buying Shiba or Roba or whatever. You want to ask yourself, what is this token used for? You have to begin to think like an investor. All right? Because you might make sudden money today. Of course, there's some persons who bought a token, they don't understand where it is coming from. But just because somebody mentioned it, they bought it, and then the thing pumps. And they're like, oh, I made money. But I'm telling you, that person will lose money as much as they make money. All right? So the person might make 60% and later lose 100%. So you need to understand, every token should be created for a purpose. So that's why every project must have a use case. So a token that does not have a use case, you should be skeptical, except you are addicted to Baba Jebu and the likes, then you might want to gamble, into buying a token you don't understand what the project is doing. Now, token market capitalization. Now, market capitalization is an important metric. It's a metric that is used to assess the popularity of the project. All right. So, which means it tells you, how many of these tokens are already actively in the market, actively held, bought and sold, over and over in the market. That's market capitalization. It is determined by multiplying tokens' current price by its circulating supply. Now, importantly, in the long run, the market cap is a strong indicator of a token's worth. And that is why for every newbie coming into the ecosystem, into the blockchain space, right? It is important to first test your ground with Bitcoin and Ethereum. Why? Because projects with larger market cap are more safe and less risky. All right. So if you buy Bitcoin at 60K, okay, and Bitcoin right now is trading at 40 or 30, okay, you still have more assurance of getting your capital out of that market. It might just take time. But projects with small market cap are very risky because you might not get back your capital, not anytime soon. Projects in market cap that are very low and are not solid, you might not get your capital back. Okay. Now, let's understand the total Bitcoin supply. Okay, this is important that because for Bitcoin have a fixed supply. All right. And the supply of Bitcoin is fixed at 21 million Bitcoin. So 21 million Bitcoin will go around in circulation. But the entire 21 million Bitcoin would get to go around in circulation by the time 2140, right? And today, this year is still 2020, right? So you are looking at the fact that it will take a very long time for this to happen. Okay. Now, interestingly, the total supply of Bitcoin is just 21 million. And remind me the total number of population in the world. All right. Let me come in. Trying to get my. All right. The total number of population in the world. Okay. The total number of population in the world is 80 billion. 80 billion. Imagine we are just at the early stage, and BTC has already hit 69 mark in price for one BTC, right? So there is high possibility, very, very possible, right, that BTC would hit 100K soon, right? Anytime soon. All right. But I'm not sure this year because this year is already looking somehow. The macroeconomic environment, the geopolitical environment, the tension in the air is not favorable to the market, right? Any little pump you see in the market now is smart money taking profit. Smart money taking profit. I'm telling you. All right. So we have short-term bull run, medium-term bearish market. I don't know, long-term doesn't look clear, but then probably after we've experienced short-term bull run, medium-term bear market, then we can foresee what will most likely happen. All right. But the market is dynamic, so anything can happen. I'm only talking from the analytical part of view, looking at the macroeconomic environment. All right. So we have 21 million Bitcoin supply. This may appear as a significant amount, but it's very small compared to the total population. All right. So now that is why people are now trying to compare Bitcoin to gold, right? Because of course you can't see gold anywhere. Gold is a very scarce commodity, right? So now at this point now, Bitcoin will now become a scarce commodity, right? So that is why it's being compared to gold, and that's why it will be easy for them to legalize Bitcoin. You get down to legalize any other currency. All right. Why? Because of the value that Bitcoin would carry or is carrying already. All right. And it will now. My God. Is it changing now? Sorry. I didn't know my screen is not showing me. How about now? Can we see it? So you just use the comment section.
Yes.
All right, great. Okay, all right. So, okay. I'm trying to. Oh my God. All right. Can we still see it? So, can we see it now?
Yes.
All right. So now, there will only be 21 Bitcoin in circulation. That's the total supply of Bitcoin, right? And we are currently 8 billion and more persons in the world. All right. Now, looking at as Bitcoin becomes more adopted, more popular, many persons get to know more about Bitcoin, then we are expecting a drive, an increase in the price of Bitcoin. Why? Because scarcity drives up price. Scarcity drives up price. All right. In Russia currently now, dollar is scarce. Before the war, $1 was 80 rupees. Okay. Now, when the war out, people started pulling out their money and buying Bitcoin or buying the dollar, right? Then the scarcity now drives up price, whereby one rupee now is now 150. $1 is now 150 ruble. You get? So scarcity always drives up price. When supply is low and demand is high, price increases. Just like you get to the bus stop and you people are many at the bus stop, right? And there are only few, bus, right? If the driver inflates the price, even though we are complaining and saying, we are the ones suffering ourselves, within ourselves, there will still be some persons who will still want to buy, who will still want to patronize, even at that high price. And that is how the price will be going as high as possible. Okay. Lastly, unlimited supply of crypto. Now, we've looked at some cryptos that have fixed supply, some cryptos that have unlimited supply, right? And for them to have unlimited supply, they have a mechanism via which they use to preserve excess supply. Even though the supply is unlimited, they have a mechanism to prevent excess supply, and we'll get to understand it as we go forward. Now, he said, however, other coins have a totally varied timetable, like Doge and Green. For example, have the same issuance for every new block created in eternity, meaning that their token supply is almost endless. Almost endless. Now, currently, Doge has a circulating supply of 132.67 billion Dogecoin at the time of writing this. Okay, no specific maximum limit. It doesn't have a maximum limit. It's not fixed, right? As a result, it has an inflationary supply, contrary to Bitcoin's deflationary supply. Okay. In addition, Doge supporters, including high-profile millionaires, say that its tokenomics makes it practical currency. Okay, now let me explain this now. Now, for these tokens, all right, they have an endless circulation, total supply, right? It's unlimited. Okay. Now, look at Bitcoin. Bitcoin only has 21 million Bitcoin, and it can only be reached by 2,140 a year, and we are still in 2022. Look at the range now. But look at Doge. Currently, we have 132 billion Dogecoin circulating in the market. Now, in some cases, the number of coins or tokens will decrease, which means there's a mechanism there which they use in taking out some already existing coins, right? Some projects have set rules that requires a certain quantity of tokens to be transferred. We call it burning. Many of you have heard, you might add that, oh, they are burning BNB. They are burning BNB, right? You must have heard about that they are burning BNB. That burning BNB, burning Ethereum, burning BNB, burning Luna. Some of you have seen there's a token called Luna, and despite the fact that there's a bear market, it has been moving at a very fast pace, and that's because it's currently undergoing burning, right? Which means they are burning some numbers of tokens out of existence, which is they are taking away the supply, right? While the supply remains unlimited, they are burning out some cryptos, some tokens that are already in circulation, so that it can create room for scarcity that will drive up the price, right? So when they burn those up, okay, so that is all from this slide. So let me just do a little walkthrough while I round off. All right, while I round off, I just want to walk us through some of the metrics to pay attention to. We talk about Juno. We looked into Juno when we are looking at projects to identify Juno, and I told us, for those who followed, you can go and watch the video again. I told us that Juno would rise from a particular price. I think it was 28 at that time, right? And currently we can see that Juno is currently at 39, 39.7. It's a very solid project. It's not a financial advisor. So now we come here. These are metrics that makes up token economics, right? This is market cap. This is fully diluted market cap. This is the volume. Then this is the maximum supply. This is the total supply. Let's have a wrap up of what they all mean. So if you go to your coin market cap, let's come from the total supply here. Now, total supply, you can see that total supply, the amount of coins that have been. Can you see my screen?
Yes, you can see it.
Okay, good. You can see coin market cap, right?
No. I can see your limited supply. Slide 9 of the slide you were
All
sharing.
right. Okay. So I get. Let me share the. Let me share that. All right. Can you see it now?
Yes.
Okay, great. So let's start from this is metrics that makes up token economics, right? So some metrics, total supply. So what's total supply here? So total supply, the amount of coin that have been already created, minus any coin that have been burnt. Do you get that? Now this one now has more like a burning mechanism, right? A burning mechanism where they burn out some token in order to create scarcity. All right, in order to limit the number of tokens in circulation, so that as demand is higher than the supply, price will increase. Okay, and those already existing tokens will be burnt out of existence. All right, you might want to read more into it, do more research. All right, so it is analogous to the outstanding shares in the stock market. Like we can see it as an analogy, very similar to what happens in stock market. If this data has not so we say that the total supply is the amount of coins that has been already created minus the coins that have been burnt. Now, what's the max supply? Now, the max supply, the maximum amount of coin that will ever exist in the lifetime of this cryptocurrency, the maximum amount that will ever exist in the lifetime of this cryptocurrency. Okay, so it is analogous to the fully diluted share in the what's it called, in the stock market. All right, so this is the maximum. Is the supply here is fixed. All right, maximum coin that will ever exist. Okay, then we look at the volume, a measure of how much of the cryptocurrency is being traded in a day. Volume is also very important because you want to look at it. You want to look at growth in volume, right? So if the volume traded in January 2021, right, is still like the volume traded in January 2020, it's a red flag, right? It's a red flag. It shows that trades are not interest are not coming into the market space. It shows that people are not trading it. It shows that people are not actually buying a lot and selling a lot, right? It shows lack of growth. But the moment you look into volume, you look into the chart of volume, right? You can read more about volume and look into the chart of volume, and you see the growth in volume. Then you know that, okay, fine. If volume have been increasing for the past 6 months, there is so much prospect in this project, right? That volume would keep to increase. All right. Now, fully diluted market cap. The market cap, if the maximum supply was in circulation, the market cap, if the maximum supply was in circulation. So now, this one here is the value of the maximum supply in June, which means we would have 185,562,268 Juno that would be ever exist. Now, the max supply times the current price gives us the fully diluted market cap, right? This was the fully diluted market cap, which means the market cap, the fully diluted market cap is the current price times the maximum supply that will ever exist. So the market cap, the market cap is the total market value of the cryptocurrency currently in circulation, right? Currently in circulation. So we can say the current price times the circulating supply, right? You can say the current price times the circulating supply. Okay. So I would like to bring it to a close here. We've now understand what token economics is, what to look at, right, when looking out for projects that you want to invest in. All right, that you want to invest in. So if you have any question, you can do well to ask. If you have any question, you can do well to ask. You can just unmute yourself and ask a question. If you can't unmute yourself, you can just drop it on the group. Any question? Any question? Okay. So in the absence of no question, I would like to bring this session to a close. Will come on this session. I want to believe that we are actually getting value from this session, okay? And it's important that you take it up upon yourself to also share this value that we give. All right. So we don't want to come here and start struggling to say, oh, we are live, right? There are some of our networks, some of our friends who are interested in getting values like this. Okay. So when next we share our session, okay, I would appreciate if we can share with our friends, share on our status. If you are proud of what FinSmart community is doing, you can reshare. Because number one is this: I would be encouraged, all right, if I'm seeing more persons coming up, but I'll be discouraged, you get, if I'm not seeing more persons coming up. All right, I'll just focus on areas where I'm seeing more persons, showing interest. And that's why I want to encourage you to do well, to share with your friends, get more people to attend those sessions. Okay. Thank you very much for your time, and God bless.